G'day everybody, John Seville from Acorn Wealth Corp here, and this is your executive summary. Okay, so as we start out the process of analysis here, the first question we want to ask ourselves when looking at the S&P 500 is the ever important question: are we momentum or are we oscillation? Now we can see that the moving averages used to be working, so throughout the month of February we were definitely in momentum mode, and now we are, have been ever since really the March 13th, we are oscillating back and forth. This moving average basically means nothing, and we've been oscillating all the way into this peak here. Now, so if we are oscillating, which we currently are, until we see different, then we now have to ask ourselves, okay, well, are we at resistance or are we at support? All right, so that no emotional decision making here, no opinions, just simply fact-based information in terms of interpreted trend lines. And we say, well, based on this trend line, by connecting the bottoms left to right, are we at resistance or are we at support? Answer: currently we are under this resistance. Okay, secondly, we look at the open range of May for options expiration, which was set back here on Friday, March 15th, and we draw that line in as well. There we go, there's the low of that candle, there's the high of that candle, there we go, and you can see that we are also under that open range resistance of options expiration Friday for May. A very important day, dictating the key resistance until the next open range day, being the first trading day of June. So right now we're still under open range resistance. We're under this line of resistance. So then we look at the question of momentum. Do we have enough momentum to break that resistance? And we look at the money flow, and we see that even though we are reaching new highs over these last few days, compared to the low back here, we're actually making new lows on smart money. So you have a look here from where we're currently down at these prices, and we're now higher, and you'd expect therefore more money going into the market, but unfortunately that is not the case. We are making new lows on the smart money indicator, suggesting that the market has less interest from the smart money, even though we're actually higher than we were previously. So despite that, there's been a great range of different opportunities. There's actually been quite a lot of different stocks. Now there's too many to cover every strategy in one executive summary. So I always encourage people to stick to the strategies that you're familiar with. So for example, tonight I found 1, 2, 3, 4, 5, 6, 7, 8 shorts, which would be Bollinger short scans. 1, 2, 3, 4, 5, 6, 7, 8 momentum long scans. Another 9 fallen angels. 4 capturing the crash breakdown stocks. 5 flags. So I'm obviously not going to go through and talk about every one of those. But the trick is when you start to trade, buy and trade things that you're familiar with and that you're comfortable with, that meet your risk management strategy. But I will show you here some of the ones from some of the most commonly understood scans. Firstly, ARMH. This is an extremes trade, and you can see that we've got strong divergence in the money flow. So this could be a possible short if it were to rally up to above 54.50. Now, the one downside is this is the third time this resistance has been touched from back here. Once, twice, this will be the third time, so it's not very strong. But to make up for that, you can see it dropped from 54 to 52 before. Then the second time from 55 down to 50. So the strength increased this time over the previous. So we're hoping to see something like that. It was looking fairly bearish yesterday, was up today, probably a bit of short squeezing, and so if we get a rally up above 54.50, as close to 54, let's have a look. Alright, so the high of this candle is 54.64. Okay, so if we can get a rally up to say, well, above 54.45, up to 54.45 would give us that entry zone that we're looking for. Okay, and then I'd be looking at a stop loss There we go, right at 55.12. So we've basically got a 50 cent risk. Okay, and in terms of a target, I'd look at 51.73. So we've got a really decent risk reward of about roughly $4 for about 50 cents of risk. So from a risk reward standpoint, that's pretty damn good. So as long as we get one of these right, you can get 5 wrong and still be making money. And that's the type of trades I'm looking for in this strategy. Not a high probability, but a great risk reward. So we find a few of those, and we can get an interesting trade set up. Now this is another one, BGS. It's a little ways off for now, but keep your eye on this one. I'll be looking to possibly short this if it can get up to this price. So again, I don't care what's happening now. I'm looking at this as a very strong reversal zone. So keeping my eyes peeled for anything above 32.35 and underneath 32.67. That'll be a nice, possibly nice double top, straight back down to support, and I'd be looking to cover there around $30.13. Just actually where that gap down risk is. So that's the high, sorry, 31.26. So looking at 31.33 as the target. So up and down. Okay. Moving on, let's go to the next one here in the list, which is CMCSA. We've got insider selling on this one. Again, this is kind of one of those scenarios where we're waiting for a rally to come first. So looking for this rally up into this area, looking for a great risk reward, so somewhere between $60.44 and $60.85 is an entry. My stop criteria would be at 61.07. So you can see basically we're getting a $1 risk, so just around about 2%. But our target could be all the way back down to this support level here. You can see where this candle is there. That's where I'd be looking to take profits, down at 57.64. So decent, again, very decent risk reward, and a possible reversal trade there. So you can see these are kind of all that similar shorting heavy resistance where there is an opportunity to play the high probability risk reward stuff. Okay. And then last on the short list is AVAL. Now this one's kind of got that rolling over. It's a bit different. This is a momentum trade. So the first couple first three were all trading the extremes. This one is now more of a momentum trade. We look for a lower risk reward ratio but a higher probability. And for this one, I'd be looking for two possible entries. One, if we rally up, so we get a bounce off support tomorrow, and we get a rally up to $10.07. If we do that, I'd look to short there with a stop criteria at 10.33 and looking for a target for it to then drop down to 9.33. Okay. There is this kind of this trend line in effect, which is they're going to be the problem. But having said that, there's a significant drop off in the money flow, which is what I'm hoping will give that the momentum to break down and push this down to this lower trend line here. You can see where this gap up occurred and the rally stemmed from. So I think we'll go through this area and looking for that lower target. But again, with a good risk reward ratio, that's only a 28 cent risk, no 27 cent risk on a $10 stock, so just around 2.8% of risk for a dollar reward. So 28 cent risk for a dollar reward. I'm happy. We're happy with that. Again, good risk reward ratio. The second opportunity could be if we actually don't rally up at all, And in that situation, I'd look for a breakdown of through $9.81. My stop therefore would be lower, so instead of at 10.33, I'd have it at 10.06. Now, how can you change your stop? What you can do is you can change your stop to a lower level and still have it be valid technical analysis wise, because your entry is now lower. So you're instead of buying resistance, shorting resistance when it rallies up, we're shorting the lower level of resistance when it breaks down through it, and so that's how we can. That's how it's still valid, and why we can lower the stop in that case. So of course, the same applies as the stock drops. Once it breaks through levels, and in my opinion only when it breaks through levels, that's when you can adjust those. So on the longs, IG, this is a momentum possible fallen angel trade. We had a big gap down. You can see we've just today overcome that gap down resistance and starting to move. So this is pretty simply looking at this has a very generous upside potential of up to $7.13 is the target here. I'd be looking at a stop at $5.48. So larger stop loss, so 10% of risk on this down to the stop loss. So I'd be looking at a much smaller position size. I'd be looking at about a quarter of what I would normally put into say some of those other stocks we've talked about. I put about a quarter of that in here because I'm only really wanting to risk the same dollar amount that I would in some of those other trades where I'm only risking 2%. So, but this has got big upside, so that's why the risk is justified in my mind. So we've got, basically, if I look at an entry of around 578, with and the stop is at 548, we're looking at roughly about 30 cents of risk, so it's close to 6-7%. But from 30 cents of risk, an upside from 578, which is just above the 9-day moving average, to a target of 713. You can see that we're getting a at $1. About a $1.30 of reward. So we're definitely getting that ratio of at least 3 to 1 plus. Okay. And then SNDK is another. Okay, there's SNDK. Tech sector, of course, had a great rally today, and we can see that this one has just kind of broken through. And I think this was a good potential of if it breaks 69.93 to run up to possibly 79.87, so about a $9 run, or $10 run really. And I'd look at a stop loss at 66.63. So roughly $3 of risk for $10 of reward. Again, we get that 3 to 1 risk reward ratio. And we looked at the level of resistance here is kind of where that soft resistance is, but that really hard, sharp gap down coming from that low of that candle, and that's how that target was. We came about with that. And then last on the long list is ACW. This has had institutional buying, insider buying. It's a very volatile beast, so be warned. But I'd look at this if it can pull back to $4.12. I'd look for this to run up to about $4.43, just beneath this line here at $4.45. You could even look just shy of $4.40, around that $4.37 mark. But my stop there would be $3.96. So taking roughly 15 cents of reward with about 40 cents of upside. So again, we're just underneath that 3 to 1 risk reward ratio. So those are a few longs and a few shorts for your list. A couple, I'll throw some other ones on the watch list out for those of you who are hungry for more. A couple of stocks on the momentum down scan: EC, Ecopetrol, and Joy. And for those of you trading flags, COVS and NQ. But those are some of our more specialty strategies. If you are interested in learning the flags or fallen angels, we do have courses coming up here in the next 2 weeks. So do make sure that you contact us and register for those. But otherwise, happy trading, and we'll see you all in the next summary.